Well, before we really jump into anything else, I want to make sure that these investors that are here with us really share what they are looking for. But I also want to see, we've been here for a couple of days. So I know a couple of our investors have been here as well with us. So Patrick, you had a really great question for me earlier, which was, what have I found to invest in that's really unique? But I want to know what you have found that's really interesting.
Again, as I said, it's been a fabulous conference. The collaboration, the conversation we've had have actually expanded our mind. Chris Nuccio is with me, just fabulous people coming up with innovative structures and products that we can invest in. In particular, I've seen some great AI, some great mobile home park opportunities, some real estate micro developments. Evan's out here, just invested in a co-GP with him, and just a wonderful opportunity for me.
Fantastic. I know, Kip, you've been here for a couple of days as well. Have you had anything unique come up?
Yes, I am personally invested in the Investor Residence Program. Also, we have, I think we probably used at least 3 investments, mainly in multifamily and what's the other one? Self-storage.
A lot of self-storage. And Todd, I know you have a very unique background. You with Canopreneur. What have you learned lately?
Yeah, what surprised me the most is people actually want to talk to me this year. I'm in the cannabis space. But what has surprised me is there's a lot of money to be made in cannabis real estate. Rents are much higher than normal industrial. Retail rents are much higher than normal retail. And I've actually run into people who are interested in developing cannabis projects on the retail side. We own some cannabis real estate, and I honestly hadn't thought about going in that direction. But operating cannabis assets and then being a landlord to cannabis companies, it's something that is, based on what I've found from people here, is something there's some interest in. And I think we're going to pursue that with somebody.
Fantastic. Now, Randy, I know you've got more of a traditional family office structure that you go for. Can you talk a little bit more about that and what you look at?
Sure. The structure we put in place is the lender structure, which was based off a case a few years ago. This is not a structure for every family office, but if it fits, it makes it much more tax efficient, and it depends on the people you have in place. And then our family office is, I would say we have a lot of guardrails in place. So we have a distribution committee, we have an investment committee, we have a board of directors. So we just have a lot of people because the family is very conservative, and we want to make sure the money's around for a lot of the future generations.
Fantastic. And Tish, do you have anything to add to that? What type of structures are you looking at?
Yeah, so at the end of the day, this conference has been fantastic. I've been here actually a couple years now, and I've met some amazing people and worked with some great people in this room, actually. And so I would say is being able to get in front of people like ourselves is fantastic, and just keep on knocking on our doors. I would say the most important thing is due diligence for us, and making sure that that the numbers are correct, that the deal structure is what it is, and we have backstops to be able to understand what's happening in the economy, but knowing that where we're at right now is short term, and we're looking at potentially generational wealth, and being able to make sure that we can go through generations and being able to protect that for clients. So specifically, we look at multifamily, and a lot of real estate is absolutely a core part of our portfolio, probably about, depending on what people's risks are, anywhere from 25 to 35% in just core real estate, and then sweeteners and just direct investments. So we'll look at a variety of things, and we've gone through different structures depending on the market. So, depending on where we are is different things that we're looking at. So definitely a good deal. I say it every time. You can always knock on our door for that.
Sure. What do you qualify as a good deal? Like, what would stand out to you to make it be a good deal? We talk about that a lot, like a good deal. Not every deal is a good deal. There are bad deals.
Yeah, so I think when you go back to due diligence, which is, I can't stress that enough for a good deal, because making sure the fundamentals are important. So as of right now, we're more concerned about potential leverage, right? And how much leverage you have because of interest rate risk, and then how much skin in the game you currently have. So fundamentals that say if you have a property, are you going to be managing it? Are you outsourcing it? Are your contracts with your like renovating, say you're building something from the ground up, are your contracts secure? Are they locked in? Are the pricing locked in for a number of years? So then all of a sudden, like we experienced inflation and then the twice of the cost of lumber goes up overnight, then that affects the bottom line. And then you have to factor that in, or interest rates go up and you have a construction loan and you're refinancing, or you've done the traditional refinancing over several years, your profits then get squeezed, right? So can you support that? And do you have enough revenue to continue even in market times like now as it become a little bit more flexible? So having backstops like that in place are what we look for to be able to make sure the fundamentals are in line to find a good deal.
Great. Fantastic. Thank you for elaborating on that. Eric, I haven't gone down to you yet. If you want to talk a little bit about structures that you look at or anything unique that you've come across while you've been here.
Yeah. I think one of the more unique things that we've done that I don't see very often is we have set up a holdco and done a reverse acquisition into a listed shoe and basically taken that for any type of investment we're making into a private equity type situation. We are negotiating a royalty stream in. And so then with that royalty stream, something off the top line, we are then dumping that into our holdco that's publicly listed. So therefore, you've got a company there that has next to no expenses and continuing to grow in revenue, pretty tax efficient way to hand that down because we continue to use the money that generates to buy more royalty streams. So we're continuing to grow the asset value there while not taking taxes.